Hello everyone, and welcome to the specialist trading presentation of 3 key strategy rules. Welcome once again. My name is Stephen Primo. I'm going to be giving you 3 of the rules that virtually you can implement in about 75% of all the strategies that we teach and promote here for our students at Specialist Trading. And you can take these keys, which have a high level of consistency to them, and you can actually build a strategy if you'd like off of them, or you can add them to your current trading methodology, and we really feel it will increase your odds for success. So I'm going to be sharing them with you today in this presentation. I want to welcome you once again. Thanks for taking time out of your Thursday morning to join us. My name is Stephen Primo. I am the president and founder of Specialist Trading, and I'm excited about today's presentation because these 3 keys come in very sharply with our new trading college for the Forex market. So we're going to be talking about that as well. So these 3 keys that we're going to be sharing you with, the strategies, fall in perfectly with what we're going to be teaching in our college. And we're excited about it because it's only the second time we've offered this Forex trading college to all of our members. Now, if you're unfamiliar with our website, we are first and foremost an educational company. I've been trading for 38 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. I traded through the crash of 1987. I traded through the great bull market that started after that, and I've seen and heard and witnessed just about everything in every market environment imaginable, from straight up to straight down, sideways, crashes, tremendous bull markets. I've traded every technique and methodology around. I left the floor in the mid-90s to manage money and also to pursue my own trading. And I built up quite a following by being the director of education for a number of websites. So 7 years ago, I started Specialist Trading, where all I do is teach and mentor all of my students the things that I've accumulated in my 38 years of trading. So we're really about educating you, because it's our opinion at Specialist Trading that the reason most traders fail is because you basically are taking yourself out of the game, meaning that you don't want to put in what's required of you in terms of education or studying or research. You'd rather have someone or something tell you when to buy, when to sell. Just think of your current process for making trades. Do you rely on going to a trading room or a chat room? Do you rely on some system telling you when to buy, when to sell, or some news event, or someone on TV, even a trading guru? We really feel that that's the main reason why 80% of all traders fail. And what they really need is to put themselves back in power. And the way to do this is through sound fundamental education that has stood the test of time. And this is what we teach to all of our students, so that ultimately you can make your own trading decisions based on what you feel and what you've studied and researched. So this is what we give to all of our students, and this is what we teach them as well. Now, before we begin today's class, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 3 key rules to our trading strategies, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So we are required to show you this, and as you're taking a look at our disclaimer, I would also like to invite each and every one of you to follow us on Twitter. There is our handle right there, abbreviation for Specialist Trading. You may want to write that down. It's at SPC. LSTTRADG. I post a lot of free information on a daily basis, anywhere from daily financial wisdom, different tidbits I've accumulated in my trading career, to actual signals and positions that our members are currently in. So feel free to follow us there. Now, this is the educational portion of our company, Specialist Trading. The side of our company that promotes and markets all of my strategies and current methods is Pro Trader Strategies, and they also have a Facebook page. So you can log on to Facebook and like us on Facebook and simply type in Pro Trader Strategies. There's also a lot of great free information, a lot of videos, and things concerning what we teach at Specialist Trading. All right, so I'd like to start off by sharing with you what I learned trading on the floor of the exchange. I know a lot of people think, well, boy, you started out on the floor, so you were born with a silver spoon in your mouth. You were basically privy to a lot of inside information. It's easy to make money on the floor, but that's not true. In fact, my first year or 2 on the floor of the exchange, I struggled tremendously because I was totally out of sync with what the markets were telling me. In other words, I was researching and going to all the seminars and reading all the books of what conventional wisdom told me was supposed to work, but it just wasn't working. And I'm sure a lot of you are probably going through the same scenario right now. It's extremely frustrating and very, very discouraging because you put a lot of hard work into trying to learn how to trade and you don't have a lot to show for it. In fact, I would have maybe 3 or 4 great trades where I feel I was back on track, and then I would have one terrible trade where I gave everything back and I was right back to zero again. So I know a lot of you are going through this same scenario, and I want to share with you what I learned from my mentors. These were specialists themselves who have been trading some 30 or 40 years, and they took me aside and taught me exactly what it means to be a successful and consistent trader. And here's what they said. They said, Steve, in order to be successful at trading, the trading methodology should be non-subjective. All right, so what does this mean, non-subjective? Well, it means that 2 people looking at the same chart should come up with the same objective, the same scenario. In other words, think about it. How many traders do you see that either on TV or in some chat room will have 2 entirely different opinions about what they feel a stock or a future or whatever market you're looking at is going to do? See, trading shouldn't be that way. In order to be successful, it should be non-subjective, where everyone has the same viewpoint. Everyone looks at a chart and looks at a specific technique and knows that it's going to be going up. But if you look at a lot of different things that are very subjective, such as Fibonacci, such as the Elliott wave, such as support and resistance, there's no consistency in these methods because one trader's support is another trader's resistance. So there's too much subjectivity. So successful trading should be non-subjective. Everyone should come up with the same clear-cut direction as to what they think is going to happen. They also said that successful trading should be consistent. All right, what do we mean by this? Well, most traders are looking for the home run. I know I was when I was trading on the floor. You're looking for that big score, something that's going to, you're going to sell at the very top tick, or buy at the very bottom tick. And really, that's very, there's no way anyone can actually do that. Every once in a while, maybe you may be able to do that, but that's not really consistent in your trading approach. In order to be consistent, you're not looking for the home run. You're looking for singles, all right? You're looking for a methodology that will be more of 2 steps forward, 1 step back. In other words, we know that we will have small losses from time to time. That's okay. That's perfectly normal. Think of someone in any endeavor, in any hobby, or in any line of work. There are small failures all the time, all right? Think of someone who's playing a sport. Let's say you're just in your leisure time, you're going to ski. All right, you know you're going to fall sometimes. That doesn't mean you're not a good skier. It's the same way with trading. You know every once in a while you'll have a small loss. That's okay. What we want to look is over the long term, if you have this nice consistency in your profit and loss statement where you're going 2 steps forward, 1 step back, so you have this nice upward slope in your P&L equity curve. So that's what trading should be. We don't care about the home runs. From time to time, we may hit those home runs, and I'll show you some examples of those today, but we are more concerned about being consistent. Now, my mentors also taught me that trading should be as simple as possible. And I thought about it, and when I was trading back some 30 years ago, when I first started trading on the floor, I couldn't believe how complicated my trading was. I had maybe 10 or 15 indicators plotted on my screen. I was waiting with bated breath for every news announcement to come out to tell me what to do, so I couldn't make a decision until the news event happened. I was also subscribing to every newsletter at the time. We didn't have trading rooms or chat rooms then, but we had subscriptions, and I was subscribing to every trading guru so I could find out what to do. So in other words, my trading was tremendously overcomplicated. And my mentors took me aside and they said, Steve, it is the easiest thing in the world to complicate your trading. Anyone can do that. Whether you're trading 2 weeks or 20 years, anyone can overcomplicate your trading and put a ton of material on your trading plate. But it's the most difficult thing in the world to simplify your trading. So once they showed me how to simplify it, how to let go of what we've been taught is supposed to work but really doesn't, that's when trading starts to become consistent. So trading should be as simple as possible. In fact, look at most of the traders you know or maybe have studied with. The ones who have been trading for a relative short time, from 5 to 10 years, have usually these very difficult or convoluted trading plans. There's some indicator that you have to formulate or calculate, or some very high convoluted logic behind them where it's extremely difficult to understand, so it's probably in a system where you can't understand it at all. Most of the traders who've been trading 30, 40, 50 years down the road have maybe 4 or 5 rules tops in all of their strategies, and that's it. Their trading is tremendously consistent, and that's why they've been trading for that long a period of time. So keep your trading as simple as possible. And then lastly, the key to successful trading, which is probably the most important, which I touched upon briefly, is that trading should make you a part of the process. Remember, it's been estimated that upwards of 80% of all traders fail. And we feel it's because you're taking yourself out of the game. You're relying on an outside source to tell you what to do. Either this can be an indicator, it can be some trading guru, it can be a chat room, it can be some system you have. But once you do that, you've given away your power. You've let someone else decide what your trading process is going to be. You have to become a part of the process. So that's what we do at Specialist Trading. We provide you with all this information, all of these techniques and tools that have stood the test of time. And then we help you mold a simple plan that fits you so that you can make your own trading decisions. Most of the members at Specialist Trading stick around for maybe a month or two, and they correspond with me so that they know how to research and how to study the plan we put together. And then after that, they're on their own. Sure, you're always a member for life at Specialist Trading. You can come back and always have an update and a refresher course just to make sure that you're still on track. But most of our traders go and they have very nice consistent trading from that point. So that's what we want to do. We don't just want to force feed you signals, even though we give you strategies. Our goal is not to force feed you signals and have you blindly take them. We want you to make your own trading decisions. So that's my goal. As you see here, my goal is not to trade for you. My goal is to teach you how to trade with the Specialist Edge. This is the same edge that was taught to me. So that's a brief overview of what we do in our philosophy at Specialist Trading. So as it relies on today, what we're going to be speaking about today, as I stated, I'm going to give you these 3 rules to an extremely consistent strategy we have as it relates to our Forex college. Now, I know a lot of you may be saying, well, Steve, I don't trade Forex. I didn't, start trading Forex. I haven't even touched into that. That's okay. These 3 rules and the strategy we're going to be talking about today can be transferred over onto any market, any time frame, in any direction. So even if you decide not to become a Forex college member, you can still use these strategies in any market, in any direction. So you don't have to simply apply them to the Forex market. But here's our curriculum for those of you who are interested in joining our college, which is going to start very shortly. You see, it's 6 full weeks of training. These are going to be live classes where you're going to be live in the room with me, so we will be going over everything as if it is a mentorship, a private mentorship, just for a select few students. You see, in week 1, we go over the foundation of the Forex trading philosophy and the curriculum. And then weeks 2, 3, and 4, we talk about our best strategies for trading. These are strategy number 1, strategy number 4, and strategy number 5. When we say best, we're simply talking about being the most consistent, what we have found is our most consistent strategies. Then in week 5, we talk about probably our most popular tool for determining what the short-term trend is. That's the PET-D. And in the last week, week 6, we talk about advanced trade management, which I'll go over in just a few moments here, and then we put it all together. Now, what I want to talk about today for all the attendees is Forex strategy number 4. Remember, this can be applied, even though it says Forex, we can apply this to any market, any time frame. So let's give a brief overview of what strategy number 4 is. Now, before we get into a lot of detail here, because you may want to write these down, I know a lot of you may have some questions and may, things may not make sense to you right off the bat. But what we're going to be talking about today is more of a classroom type setting. So if you have any questions, kindly wait till the end of the presentation, and then we'll reserve the last 10 or 15 minutes for questions. Okay, we'll keep it more like a classroom. The one question I will answer, which is probably asked the most, is this being recorded? And yes, it is. We're going to record. We record all of our presentations. So if you have to leave early or if you're having technical difficulties, you can always go to Pro Trader Strategies and request a link to this particular recording. Okay. So if you have any questions about strategy 4 or anything I'm going to be covering today, just wait for the next 20 minutes, and then we'll go into the question and answer period. All right. So let's talk about strategy number 4. Who is strategy number 4 for? Okay, what type of trader would be trading this particular strategy? Well, it's for traders looking to catch quick momentum moves. Now, this strategy was actually shown to me on the floor of the exchange, and it was designed because we were basically day traders, and by day traders, I mean we held positions maybe for 5 minutes at the most, but it was designed to get in and out very quickly. Having said that, we show you ways in which to stay in it much longer if you like. And I'm going to show you some examples of that later on in a few chart examples. So you can take the most standard of exits and be in and out relatively short, within the matter of 1 to 3 days if you're trading daily bars, or 1 to 3 bars if you're trading intraday. Whereas if you like to stay in, we show you different techniques for staying in and capturing as much gain as possible. So don't just think that this is a short-term type of strategy. If you say, well, that's not the way I trade, that's fine. We can extend this as well. It's also for all traders, all students, for beginners to advanced. We have hedge fund traders trading this. We have people who have been only trading for a couple of weeks. Everyone gets the same rules. Everyone gets the same basic format, and then we structure it after that with you personally to either make it more advanced or more conservative, depending on how you want to trade. Now, it's a pattern recognition strategy, so we don't have a ton of different indicators and a ton of different things to look at. We teach you a specific pattern that we're looking for. Its intensity level from 1 to 3, if 1 was the most intense type of methodology, meaning you had to be glued to your computer screen at all times, and if 3 was the least intense, meaning you could just basically enter an order and walk away, well, it's right in the middle. It's a moderate intensity level at 2. So it's very simple and easy to apply. Remember, in closing here with this brief overview, our edge here is consistency. We are not looking to catch home runs. Every once in a while, we will get these tremendous home runs, and we'll look at this and go, it's phenomenal how well these strategies do. But that's not our goal. We're looking to hit singles once again. That's our edge at specialist trading. All of our methodologies, strategies, tips, and techniques have a high level of consistency to them. It's just up to you to research it in terms of fitting it to meet your persona, whether you want to trade aggressively or conservatively, and then stick with it. So you have to put in the work to become a part of the process. We're not just going to, once again, force feed you a strategy and say, oh, just buy here and sell here. That is a recipe for disaster, in our opinion. That's why the majority of traders fail. We don't believe in that. We don't think that everyone trades the same way. So we have many students who trade the same strategy, such as strategy number 4, and come up with entirely different results. Someone can make a nice small little gain every 1 or 2 days. Another one can make tons of money every day. It all depends on how you become a part of the process. Either way, we have a very high level of consistency in our methodology. All right, so let's go on to what we're going to be looking for. The first thing we said is strategy number 4 is a pattern recognition strategy. So we're only going to be applying one indicator. Now we call this indicator our buy-sell line. And all it is a 50-period simple moving average. So that's the only thing you should have plotted on your screen. You don't have to have, excuse me, any stochastics. You don't have to have any news events. We don't care about what the news is. You don't have to have any, tons of moving averages or different types of, specific convoluted indicators that you had to formulate. No, just a 50-period simple moving average. It doesn't matter if you trade 5-minute bars or it doesn't matter if you trade weekly bars. All you need is a 50-period simple moving average of that time frame that you're looking at. Also, we don't have to look at different time frames. You don't have to look at 2 charts. So if you're trading the euro dollar on a daily time frame, we don't need to know what the weekly is doing in order to trade the daily. Once again, we're getting on that road to overcomplicating things. I found in my 38 years there's no consistency to looking at a higher time frame to discern what the lower one is. Now, I'm not saying that it doesn't work, but I personally have found no consistency in that technique, so I don't apply it. But having said that, we have many students who swear by it, so that's fine. But you don't need to have that. It's not a requirement. The only requirement is that you plot a 50-period simple moving average. Okay, so here are the rules. Here are the buy rules. Remember, this works in any time frame. You can reverse this for sells, but these are 3 of the key rules, all right? We're not going to give you the exits or the stop placement because everyone, that's something that we formulate with you once you become a member. But we're going to give you 3 of the most basic rules. There's only 5 rules in the strategy, and that's stop placement and exit, but those are very simple to formulate on your own if you like. But let's give you the rules for buys. Once again, any time frame, any market, any direction, so you can just flip these rules over if you're looking to go short. All right, so if we want to go long, we have to see that the closing price must be above the buy-sell line or the 50-period moving average. Why? Because it tells us that the overall trend is up, not the short term, but the overall trend is up, so therefore we want to be in sync with the trend. So in other words, if the price closes above the 50, we will never be looking to go short. There's no way we'll go short if the majority of price or even the closing price is above the 50. Now we can have the majority of price above the 50 and then the close below, and we can still have a valid signal to go short. That's a little bit more advanced way of trading. But remember, we can only go in the direction of where the close is. All right? Now, if price does close above the 50-period moving average, we're going to look to buy when we find a price bar that closes in the top 25% or the top quarter of its range. We're going to call this the setup bar. So what that means is, regardless if we're looking at a candlestick or an open, high, low, close, you take the range from top to bottom or from wick to wick, and you divide it by 4. The top quarter is the top 25%. That's where you want to see that you've closed. So even if we close above the 50-period moving average, but we don't close in that top 25%, we don't have a valid setup. So that's our setup bar. Now, we're still not going to enter. We're not going to blindly buy at the market or place a limit order. We're only going to buy when price trades 1 to 3 pips. That's if we're trading the Forex markets, or 1 to 3 ticks if we're trading other markets. If price trades 1 to 3 pips above that setup bar's high. So in other words, we have to see us trade higher than the setup bar. It doesn't have to close there. It just has to trade higher on an intra-bar basis. And it has to happen on the next bar. Why does it have to happen on the next bar? Because we're looking to catch momentum. Remember, we stated that strategy number 4 is designed to catch quick momentum moves. So we want to see that we've exceeded yesterday's high by 1 to 3 ticks on the next bar. This is telling us that the train has left the station and that we're most likely going in that direction. You see, if we had a valid setup bar, if everything falls into place, but then we kind of hover around for 3 or 4 days and don't go above that setup bar's high, most likely there's no momentum left in this setup. So we don't want to take the trade. So if the price bar does not trade 1 to 3 pips above the setup bar's high on the next bar, then we negate the trade. We look for another setup. Now, I know this may seem a little wordy and a little confusing to some people. That's okay. Let's look through a lot of examples right here. In fact, let's go step by step so that you can fully understand the process. All right, step 1. Price must close above the 50-period moving average. It does not matter if we're trading a 5-minute chart. It does not matter if we're trading a daily or a weekly. But whatever chart you're looking at, just simply go into your indicator box and click on simple moving average, and then make it a 50-period, all right? So as we see here in this generic chart, I specifically made sure and took out all of what the market was and what time frame, because I want you to understand that this is going to be working on any market in any time frame. You see that the majority of price is above the 50-period moving average, all right? Now, we kind of close below this one right here, but in this bar, we close above it. So price closes above the 50-period moving average. That's rule number 1. Rule number 2 is we want to look to buy when a price bar closes in the top 25% of its range. If it does, we will label this the setup bar. Okay, so once again, for you students who have a difficulty in discerning what the top 25% of its range means, we look at that bar once again, all right, that closed above, and we just take from top to bottom. If this was a candlestick bar, we would just take from the top of the wick to the bottom of the wick. The range, for some reason people think that range means from open to close. I don't know how over the years this has been translated into open to close. That's just the open to close range. That's just the body. But true range is the high minus the low. That's the range. So if we look at this bar which closed above the 50, here's the top of the range, here's the bottom of the range. Now we simply divide this range by 4 separate but equal parts. Okay? You see how we have 4 separate but equal parts? 1, 2, 3, 4. And you can do this with any bar. It doesn't matter. You just divide it by 4 equal parts. And the top quarter is the top 25%. So we want to see us close anywhere within these little brackets, as we did. In fact, we closed at the very high. So this is a valid setup. We now have closed above the 50, and we've also closed in the top 25% of the bar's range. We're going to label this the setup bar. Does it mean we just buy at the market now? No, we still need one more qualification to enter into the trade. This is our 3 basic and essential rules here. Step 3 is we enter to buy when price trades 1 to 3 pips above the setup bar's high. But please remember, if the price bar does not trade 1 pip or 3 pips anywhere in that range above the setup bar's high on the next bar, then we will negate the trade or we'll negate the setup. So remember, once again, we're looking to find momentum. So we found a valid setup bar here circled in blue. Now, if there is momentum left in this upside, it will trade right here at this green horizontal line on the next bar, regardless if this is a 5-minute bar, a daily bar, or a weekly bar. We don't care where it closes, so we could trade here and then close lower. That's okay. All we want to see is that we intra-bar traded here, and it must be on the next bar. If it does, this is our signal to go long. Now, since we're talking about the Forex college, we're talking a lot about the Forex markets. But remember, this can be a stock, this can be a future. It doesn't matter. So as we see here, yes, we did trade there. We actually traded above, and look where we closed. We closed lower. Once again, we don't care where the close is. We could have closed at the very bottom. That's okay. It's still telling us that we have momentum to the upside. So we entered right here, and then there's where the momentum took off. It took about 3 or 5 days to take off, but it eventually did. And this is the basis for roughly 3/4 of all the strategies we have. We use these techniques. All right. Now, we still need to know about our exit placement. We need to know about stop placement. Those are all in the courses. Those are very simple. And for someone who's been trading for even a small amount of time, you can basically figure where you'd like to place your stop and where you'd like to exit. All right, so let's share with you some recent strategy number 4 trade examples, showing you how, we're not just going to cherry pick. We're going to show you some recent examples of how well we've had some nice trades here using this technique. Here's one in the Swiss franc. Okay, as we look back here, this was at the end of last year in December. We were, for all intents and purposes, above the 50-period moving average, and then we closed below there, but then on the very next bar, bounced back up. And guess what? We closed in the top 25% of its range. So this is a valid setup bar, telling us that we can go long the Swiss franc if we traded 1 to 3 pips above on the next bar. Okay, so we had our automatic add-on, which automatically generates buy and sell arrows, would have generated an arrow there for you, or a dot, depending on what software you have, and telling you that a valid strategy number 4 setup has been generated. So you would want to go long if we trade here on the next daily bar only. As you can see, we did. So on the 18th of December, a bar traded above there, and in fact, it closed even higher. Now, you could actually exit wherever you'd want. If you want to just exit on this day to take a quick momentum move, you could be out very easily and very simply. It's up to you how you really want to. Remember, it's up to you to become a part of the process. You can stay in longer. You can get in and out as quick as you want. It's up to you. But look what happened in the Swiss franc over the next month, coming into January and February. It continued to go higher, and if you wanted to use one of our more aggressive techniques for staying in the trade as long as possible, guess what? You would have exited right up here. Now, this is thousands of dollars per lot just trading the Swiss franc. How about the British pound? Well, the first thing we ask ourselves is, where is price in relation to that 50-period moving average? Price is below. So this means we're only looking to go short. Remember, if price is below, we're only looking for sell setups. We will in no way ever try to buy if we see that price is below, because that doesn't fit in with the rules. Remember, in order to go long, price has to close above that 50-period moving average. And as you see here, there are absolutely no closes above the 50. So there's no way we could ever even consider going long. We only want to be in sync with what the overall market is telling us, not some trading guru or not some guy on TV saying that he thinks the British pound has bottomed out. We don't care about those things. We only care about what the market is telling us. And since the British pound was below the 50 period, it's telling us that it's most likely going lower. So our only job is to listen to what it's telling us and then jump on board. That's how simple trading is. We only make it more complicated than it has to be. So since price is below, we want to go short, and look at all of the sell signals that were generated using our proprietary add-on that generates the buy and sell arrows. So in the last month of last year, coming into the first month of 2015, we had 3 sell signals, and you could have taken all of these and had a very nice gain going short the British pound. Now, we can apply this to a weekly chart. As you see here, an advantage of trading strategy number 4 is that it can be applied to virtually any time frame. As we look at a longer term chart here of the Canadian dollar, we see that even though we don't have the 50-period moving average, it's below where we took a snapshot of this chart. I can assure you price is above the 50-period because the add-on generated a buy signal at the end of this particular week last July. So there was your signal to go long. You could have purchased it right here, and look what happened on that weekly time frame. From last July or August all the way into this February, the Canadian dollar has been going up on a weekly basis. Not because of some economic news or some fundamental news or some jobless claims or whatever you want to look at that came out, all because off of this proprietary pattern we teach you how to spot, as well as price being above the 50-period moving average, the market told you it was most likely going higher. It's up to you about what you want to do. You can decide to stand in front of it and try to short it, which would have been a recipe for disaster, or simply jump on board and go with what the market's telling you. Now here's a 2500 tick bar chart of the euro dollar. As we see here, we have 3 signals to go short that were generated by our software. Now this one is a little tricky. As you see, it's a more advanced trade because we actually closed above the 50-period for 1 bar, but then the very next bar came lower and closed below it. As you can see, it closed in the bottom 25% of its range, so it was still a valid sell signal. So you could have taken that, or if you didn't want to take this, if you felt a little uncomfortable being so close to the 50-period, you could have taken these other 2 that were well below, and you see here that you had some nice sell signals to go short the euro dollar on an intraday basis. Now, as I stated in the beginning of this presentation, these are very consistent strategies, but I think one of the best things about all the strategies that we offer in this is that they can easily be transferred. Now, they work well with currency pairs. That's why we're having this Forex Currency College, once again, starting in a couple of weeks there for all of our students. But you can also apply these to different markets. In fact, you can apply them to stocks, ETFs, futures, and commodities. So let's say you trade the Forex markets, but every once in a while you will dabble in futures, you'll dabble in stocks. Well, that's fine. You can easily transfer them over onto the other markets without changing anything. In fact, let me show you some examples here. Here's letter G. The same software, once again, generated a buy signal on the 2nd. Now, remember, we're an educational company. We provide you this software that generates up and down arrows as a service so that you can basically check your homework, so that you can know when a valid signal is being generated. This is your learning tool. But after a while, you won't even need that anymore because, as I stated, we're an educational company. We want you to become a part of the process. I don't want you simply to rely on an up or down arrow to tell you what to do as if it's ringing a bell and it's time for you to enter into the market. We want you to understand the process. So we provide this for all of our students, but as an educational tool. After you've traded for a while and learned the process behind this particular strategy and all of our strategies, you really won't need it anymore. You won't need to see those arrows. You'll be able to spot a setup as it's happening. But just about a month ago in letter G, a valid setup was generated to go long. You see we're above the 50-period moving average. We closed in the top 25% of our range. Now, I know someone who doesn't understand the rules yet could have said, well, Steve, this closed in the top. Why wasn't this a valid signal? Well, it was a valid signal, but see, we never traded on top of there, so you never had a trade. But in terms of this one, well, coming into this day on the 2nd of February, it was a valid setup. We're still not long yet until we trade above. And once we traded above, you could have entered here on this next day, and look what happened in the stock. This also works to the downside. FAST, Fastenal, we see here we're well below the 50-period moving average, so this means we're only looking to go short. Now, just about 3 weeks ago, a valid sell signal was generated to go short FAST. You see we closed in the bottom 25%. You could have gone short the very next day, and look at the nice move the last couple of weeks we've had to the downside. Now, we can also apply this to the E-mini futures. This is a more advanced type of trade that we teach in our courses, but once again, a still valid trade here. On the 3rd of February, just about a month ago, we were below the 50-period moving average on a daily E-mini future bar. But on this particular day, we closed above, and we closed in the top 25%. So this is a more advanced entry point. The same rules still apply, but the majority of the bars are below, so you would have to according to your risk parameters and according to how you study and research the methodology, you can decide for yourself if you wanted to take this aggressive trade here. But all we need is to follow the same rules on the next day. If we traded above, you would have entered. So we see here that, look what happened. We traded above, didn't close above, but that's okay. Our only requirement is that we trade above the setup bar's high. And look what has happened coming into March. Okay? Now, a lot of people have said, well, it's because of news, fundamental news that's come out, earnings, jobless claims, what's going on economically, whatever. There's always a reason. Well, we didn't know this reason a month or so ago. The only reason we looked at was that the E-mini closed above the 50-period moving average, created a valid setup bar, and the majority of our students who are aggressive traders took this long signal. Now, we realize that it takes a little bit more risk parameters to trade futures overnight, a lot more capital requirements, as well as a lot more risk involved. So we can also apply this to a 5-minute time frame. As we look on the far right here, this was just last week. This was coming into a 5-minute bar coming into March, as we see here on the bottom. So this was, I believe, the 27th of February on a 5-minute time frame, the last couple of hours of the day. Price coming into the last couple of hours of the day was above or oscillating above or below the 50, but then roughly around 10:30 Pacific time, we started to have consistent closes below the 50, telling us we're only looking to go short. The add-on generated an automatic sell signal right here, and then look what happened. You could have gone short roughly around 2107, and in the last hour or so made a good 6 points, $300 per contract. If you traded 5 contracts, that's $1,500 in a couple of hours, just off of what the market, not an outside source, not some trading guru, not some chat room, but the market itself is telling us. Remember, we want to keep things simple. And the easiest way to keep things simple is just to view and listen to what the market's telling you, not an outside source. You're going to save a lot of time and especially a lot of money. You don't have to purchase all of these outside conditions and courses and books and things and subscriptions and chat room fees or trading room fees. You can just have the chart in front of you. That's all you need to know. And we can also apply this to commodities. Here's an older chart of crude oil from last October coming into the beginning of the year. We all know that crude oil was falling out of bed. Okay? Now, price was below the 50-period moving average, so we know that the only thing, as members of specialist trading, the only thing we were doing in crude oil since August was shorting it. We weren't looking to pick a bottom in crude oil until we closed above the 50-period moving average. But in this time period here, from roughly September, October to January of 2015, we were below the 50-period moving average, and look at the signals that were generated to go short using strategy number 4. So you could have taken these and gone short the first day of October, then again in the second week of November, and then again in the third week of November. So we've just shown you how these strategies, most especially strategy 4, transfers onto not just the Forex markets and not just intraday trading, but all markets, all time frames, all directions. Now in the college, we're going to give you these 3 proprietary strategies that have the highest level of consistency, we feel, in our courses. But we're also giving you 2 extra bonuses in the college. We're going to give you what we call the ATM and the PET D. So what exactly are these? Well, the ATM stands for Advanced Trade Management. And what it is a simple formula or calculation that will basically keep you in settings like these when everything works perfectly, when your strategy is working fine, and keeps you out when your strategy is falling into drawdowns such as these, where every signal doesn't work. I was introduced to this formula on the floor of the exchange, and it has literally saved me hundreds of thousands of dollars over time by keeping me out of bad market conditions and having me trade my strategy when the market conditions are ripe to trade that strategy. It's a simple formula that you can calculate, that you can apply not only to Forex trading, but to any trading as well. We're going to give you that and share that with you, as well as the PET D. Now, this is an extremely popular tool, probably one of our most popular tools at Specialist Trading. The PET D is a technique I was introduced to once again on the floor some 30 years ago, and we've named it the Primo Early Trend Detector, because when I was first introduced to it, it was just the calculation. We just used to call it a calculation that we did every day. You see, we didn't have high-speed computers some 38 years ago, or programmers then. So we had to calculate this every day, so we just called it a calculation. Now that we have the advent of high-speed computers and programmers, well, we've devised this and made it a color bar algorithm. And we named it the Primo Early Trend Detector, because it's a color bar algorithm that discerns, really fine-tunedly discerns the short-term trend. So when you see a series of green bars such as this, the PET D is telling you that the short-term trend is up. And when you see a series of red bars, well, the short-term trend is down. It's that simple. Now, this is a proprietary tool. We don't give you all the reasons and the calculation behind this. So there's nothing you need to do other than just plot it on your screen and watch the colors turn for each and every bar. As you see here, this is a daily chart of the Canadian dollar. The beauty of the PET D is that it tells you which direction you should be trading. Once you know, you can apply any strategy to that direction. And you can apply this not only to the Forex markets, but to stock, E-mini, intraday, E-mini futures trading. It doesn't matter. I use this on a daily basis. And I've been using this since it was first introduced to me on the floor. Once again, it was a calculation we had to do by hand, so we could only apply it to daily bars when I first started using it. But now that we have the programmers available, we've been able to devise it to a color bar algorithm, and it will simply tell you by color, by the close of each bar, whether it closed green or red, telling you what direction to be in. Now the beauty is, even if you have downward days here, such as these down days, the bar still remained green, telling you that the trend is still up. As we see here is a chart of the euro dollar. When the euro dollar was falling out of bed, even when you had these nice up days in the candlesticks there, the bars remained red, telling you not to get sucked in, not to think that we've bottomed out, because the trend is still down. So once you know the trend, such as in nice scenarios like this, it makes trading so simple. You just have to be in sync with the colors. That's all you have to do. And for all you, long-term traders as well, you can apply this to your portfolio. Remember, it doesn't just apply for the Forex markets. You can apply it to intraday trading or long-term portfolio trading. Now, here is a monthly chart of the S&P 500 going back 25 years, back to 1995, okay? We see here all the peaks and valleys of the index on a monthly time frame. You see here when we started going straight up, and then in 2000 we had the bubble burst right here, the dot-com crash, and then we fell out of bed until 2003, and we started going back up again, right back up to the highs, until we had the financial crisis right here, and then we fell out of bed again. And then since 2010, we've been basically going up ever since. Now, what if there were a way that we could have known when to stay out of these large sell-offs and crashes, and when to remain into these nice upward moves? We could apply this to our IRAs. We could apply this to long-term trading. How could we have known when to be in and when to be out? Well, we just simply apply the PET D. And once the majority of bars are green, you just stay in the position. The rule of thumb is when you see 3 different bars of the opposite color, that's your trend change. So roughly right here in 2000, we had 3 red bars now. That was your indication to get out. So you could have missed and bypassed this entire dot-com crash all the way down to 2003. Once you had 3 more green bars appear here in 2003, time to jump back in the pool and go long the market, whatever markets you're interested in, whatever stocks or equities you're interested in. Then once again in 2007, we hadn't even hit 2008 yet, 2007 we had 3 consecutive red bars, and you could have exited your long-term positions and bypassed this entire crash here, okay? And then once we had 3 consecutive green bars, we're back in business and we're staying long, and we've been long the entire time since. Now we have a splashing of red every once in a while, but remember the rule of thumb is you want to see at least 3 bars. So right here in 2011, we had 2 red bars, not enough to get us out of the market, so you still would have remained in. So all of these things are included in the Forex College curriculum. As we stated, we talk about the foundation and the building blocks of Forex trading. We also give you 3 of our best strategies, the complete rules to strategy number 1, which is a pullback strategy, strategy number 4, which is a momentum strategy, and strategy number 5, which is specifically designed for candlestick traders. Then we show you how to apply and use the PET D, the color bar algorithm. Lastly, we show you how to use advanced trade management telling you when to trade, when not to trade, and then we put it all together for you so that any questions you may have, we answer them and formulate your particular style for trading. But it just doesn't end there. It doesn't mean that, well, that's it now, good luck, and we wish you the best. You're going to be a lifetime member, so you can always correspond with me. This also includes, my personal email address. You can contact me whenever you like. Included in this, you also will get email alerts as well. Let me show you a couple of email alerts. This was one on the last day of December last year. You will be issued this when a signal is generated, but remember, these are for educational purposes only. After a while, once you understand the process, you won't need these anymore, just as you won't need the up and down arrows. Even though you still get them, you really won't have to rely on them because you'll know when a signal is generated prior to receiving the email from us. But on the last day of last year, you would have received an email telling you that a long signal was generated in the Canadian dollar. We tell you where to get in. This was the top of the setup, and then we give you the stop, the standard stop, and the standard exit points. Now, as we see here, this was the signal generated for strategy number 4 in the Canadian dollar to buy on the 31st. Okay, all we had to do was wait for the next day, and look what happened. Okay, so that was a nice 300 or 400 pip gain in just the next week or so. Now, this was a more recent signal that we issued to all of our members on the 4th, just about a month ago, and this was a sell signal in the euro dollar. As you see here, we alerted all of our Forex members to go short the euro, telling you if it trades at this point or lower. Now, this was on the 4th of February, a very short time ago. As we see here, here was the setup to go short, and look what has happened ever since. Doesn't look like a lot, but that's about 300 pips to the downside. About, if you're trading one lot, that's close to $3,000. So let me show you what some traders are saying about it. These are all tremendous testimonials that many of our former college members are saying. Now they're on their own trading, but this is something that I want to share with you, a recent testimonial that someone sent us, and someone who struggled for years trading the Forex markets. He started out by saying, "Hi, Stephen. At 77 years young, I have been day trading Forex for some time. I was hanging in there with good money management, but not really making any money." Does this sound familiar to anybody? "But since discovering you, the 50-period moving average, and using strategy number 4 since September 19th, this was last year, obviously, I've locked in 873 pips and have 5 open trades sitting at 631 pips, all in the market. Missed a few. I only have to review the charts twice a day, which allow more trades and at lower risk than daily. Plus, I get to golf and read more. What can I say but thank you for the education. Looking great for the future." He states a lot of important things here. First of all, the last sentence, education. Remember, we're not going to force feed you signals. Even though we provide you with emails and up and down arrow indications, it's really about educating you what these strategy signals are based off of so that you can spot them on your own ultimately. He also states that he only has to review the charts twice a day, or maybe he was glued to his charts previously. Remember, simplicity will lead you to that consistency. Consistency equals simplicity. So you don't have to be studying and researching and listening to all the news and all these trading gurus and chat rooms. All you have to do is look at the chart, enter your order if you like, and then you can have time for golf if you like. Okay? So let's recap before we answer any questions that you may have. Remember, here's what you're going to receive in my Forex Trading College. 6 full weeks of trading tools and techniques. These are live classes. We're going to share with you 3 proprietary Forex strategies, all of the rules. We're going to share with you the exact stop placement, exits, and profit targets. We'll give you the educational signal service. All right, this is where we give you the emails telling you where to get in, where to exit, where to place your stop as an educational tool. These are just the standard basis or the standard format of the strategy. Then we'll teach you conservative and aggressive versions so that you can use your own stop placement, your own entry techniques if you like, as well as your own exit points. You also get the bonuses of the ATM, that's Advanced Trade Management, and the PET-D, our most popular tool at Specialist Trading. Included is basically 38 years of trading experience. I mean, it's not just like something you get on a videotape and hopefully you'll learn it all. You're also going to get 38 years of what I've gone through. Hopefully I can shorten your learning curve so that you don't have to be trading 38 years to get onto that road to consistency. Remember, we have our strategies traded in over 80 countries around the world, from hedge fund traders to people who've been trading for a couple of weeks. Everyone gets my same amount of education and knowledge coming from my 38 years of experience. So, in closing here, Remember, ask yourself and look at your current trading plan, your current trading methodology. Is your trading subjective? In other words, do you have one idea and someone can look at the same chart or the same plan and say, no, it's going the opposite direction? Also, is your trading consistent? Do you have 3 great trades and then the next trade, the 4th or 5th trade, you give everything back? Okay, that's not consistent. Is your trading simple? Look at your screen. You have tons of indicators plotted. Are you looking at tons of charts? You have maybe 5, 6, 7 charts on your screen. Are you watching news all the time? Are you in chat rooms or trading rooms? Are you constantly looking at different time frames to tell you what to do or looking at different trading strategies? That's not a simple method. That's overcomplicated. Anyone can do that, okay? And then lastly, are you a part of the process? Are you making your trading decisions, or are you waiting for an indicator to cross over and tell you what to do? Are you waiting for someone in the chat room to tell you what to do? Are you waiting for someone on TV or some news event to tell you what to do? If you are, you're not a part of the process, and you're most likely going to be joining that 80 percentile group, which ultimately fails. So here's our invitation to all of our attendees today to join our Elite Forex Trading College. Here's all the details. You see 6 weeks of instruction, 3 proprietary strategies, all the entry, exit, stop rules, signal alerts, plus ATM as well as PET-D, along with my personal email address. Now, if we would sell all this information separately, everything totally separate, it would run close to $4,000. That's how valuable all this information is. But for all the attendees today, we're discounting the price down to $34.95, and we also are offering payment plans. Remember, this comes with 1 year of trade signals. So you're going to be getting these trade signals. This also comes with live classes. This also will come with 38 years of experience. I'll be your private mentor. So there's a lot of great free information. If you've struggled through your trading, and remember, you can apply this not just to Forex, but to any market, any time frame. I really suggest that you strongly take advantage of this discount. We can set a payment plan up for you so that you can put together just a small sum, and you can be joining the college and be trading right along with us in the next few weeks. So here's how to access the college or any of our techniques and courses. You can go to my sister site, which is Pro Trader Strategies. They market and promote all of my courses and techniques. Please email any one of their trading consultants at trading@protraderstrategies.com or call them directly at area code 310-598-6677. Now that link you see on the very bottom, that is the link that takes you directly to the sign-up page for our Forex College. So if you're interested in joining that and taking advantage of that deep discount, I strongly suggest just copy and paste that onto a browser, and you'll be able to be up and running very quickly. Now, as you see here on the chat box, if you just want to go there directly, you can go to the chat box in the GoToWebinar column there on the right. And I see they have posted the link as well. So you can just simply click on that link, and it will take you right to that page, okay? Now, I thank you for waiting. I'm going to open up the question and answer box and answer any questions that you may have. First question right off the bat, will this be recorded? Yes, it is. As I stated earlier, all of our presentations are recorded, so just contact Pro Trader Strategies, and they will send you a link to this recording, okay? Gary is asking, does there need to be a pullback to enter this trade, or can it be entered after a few bars? That's a good question, Gary. Strategy number 4 can at times be in a pullback, as I showed you a couple of examples, but it is not required. Many times it will happen in a consolidation or rangy type of environment, and you'll see that one bar that fits the setup bar rules, and that's a valid setup. So no, it does not have to be a pullback. So strategy number 4 can either be a consolidation setup, or it can be a pullback. It can be either or. That's a good question, though. Jesse asks, will it work on intraday charts? Yes, it will, Jesse. I showed you a 2,500 tick bar chart of the euro dollar. I also showed you a 5-minute chart of the E-mini. And I didn't show you any intraday bars on stocks, but yes, we have many members who trade. That's all they do. They applied strategy number 4 to, I believe, Microsoft, Apple, and Google intraday trading for stocks. So that's the beauty of strategy 4. Any time frame, any market, any direction, it has high levels of consistency. Genevieve asks, what is letter G? I don't trade currencies. Oh, Genevieve, that's when we were in the stock section. So that's not a currency pair. That's a stock, okay? So I was just I was showing you how it works in all markets, and then I said, in fact, this will work on stocks. I showed that and FAST as well. Willier asks, but the bar after closes below the 50 SMA, so is that not a sell signal? Well, remember, this is a good question. What I believe he's saying is that you get a valid setup where your close is above the 50, okay? So you wait for the next bar to trade above there 1 to 3 ticks or 1 to 3 pips. So let's say it does, so you enter, but then the very next day, that day that you entered, we closed below the 50. So what this person is asking is, so isn't that now a setup to go short? Well, remember two things. First of all, those rules are only required for a valid setup. So in other words, to go long or to go short. There's still a pattern that we have to look for that we teach you in the course. That's part of the rules as well. There's just a couple more rules included in this, and that's part of the pattern. We just can't give that all away for free because it wouldn't be fair to the people who have spent close to $4,000. But if that pattern is not met, even though we close below the 50-period moving average, it's still a valid setup. So you see, we're only concerned with that once we enter. Once we enter, we really don't care where it closed. Now, if it closes below but meets the rules and the requirements of this specific pattern to go short, well then yes, then we're going to stop and reverse. But if it hasn't met those rules, we continue to remain in the trade. Okay? I hope that answers your question, Rigar. Bill asks, what is a pip? Well, a pip is just a unit of measurement for the Forex markets. So when you're trading a stock, let's say it goes up 1 cent, or from 50 to 50.01. That's 1 tick. But when you're trading Forex markets, when it goes up 1 unit of measurement, that's labeled a pip because currency pairs are more global. So rather than say a cent, which not everyone applies a cent, they call it 1 pip. It's just 1 unit of measurement. Bill asks, what do you look for to change the trend color of the bar? Okay, I believe Bill is referring to the PET-D. Well, please remember, Bill, that the PET-D is a proprietary algorithm. We don't divulge what the rules are because we've been asked to license this for hedge funds and to some institutions, so we don't want to just simply give it away so that people can just take it and sell it on their own. So basically, I can just tell you that it's based off of momentum. We're looking to capture momentum, and it's just a simple formula. It's not anything complicated, but it's something that you have to do by hand. And if you're trading a 5-minute time frame or a tick bar chart, it simply won't do because you can't calculate it that fast. But that's why we only used it for daily bars. But it's simply based off of momentum to tell us what the trend is. Okay, let me go to the next question here. Gerard asks, do you think that these strategies are useful for trading stock ETF options? If so, which ones are best? That's a great question, Gerard. Now, firstly, we are not an option course. In other words, we do not trade option strategies. We do not talk about bull-bear spreads or butterfly spreads, things of that nature. We are basically giving you indication on education, I should say, on finding out what a specific market is doing and then telling you when to jump on board. Now, having said that, we have many students who apply our techniques to option trading. So therefore, if they get a strategy number 4 buy signal on an ETF, on let's say on the spiders or on gold or silver, rather than buy or sell the stock, the ETF stock, what they'll do is just buy or sell the option. So rather than go long GLD, the ETF for gold, they'll buy an option on that. They'll go long the calls. Rather than go short the spiders, they'll simply buy a put on the spiders. Okay, so we have a number of students who swear by this, and that's how they trade their options. They simply are using the strategies to generate the buy and sell, the valid buy and sell signals, and they know how to see them on their own. They don't wait for them to be told by us. They've learned how to spot them. And then they just choose their method of choice on how they like to trade, either an option or maybe a future or maybe just purchasing or selling the stock. It's up to them. Okay, so I hope that answers your question. I personally can't give you an indication as to which ones work best because, as you've seen, this strategy works well in all markets and all time frames. I mean, there is no best. It's all how you want to trade it. I mean, someone can apply it to ETFs and make a nice little profit here. Someone using the same rules can make a tremendous profit. It all depends on how you are becoming a part of the process. That's the most important thing, which we just stated in the opening of this presentation. It's up to you. You have to become a part of the process. That will determine whether something works better than something else. Genevieve says, why do you black out the stop and profit? Are they still valid for members only? Yes, these are for the members. Once again, we have members who have spent $3,500 for this information, and it wouldn't be fair to them for us to show you what it's based off of so that you can reverse engineer it and figure it out on your own. This is all in the courses. This is all in the college. We've given you basically the core foundation of what you should look for with strategy number 4. Okay, if you've been trading for a relatively short amount, you can decide where you want to place your stop. You can decide how much dollars you want to risk. You can decide how much you want to make. So those are the easy parts. The hard part is knowing to listen what the market's telling you and then when to jump on board. And we just shared all of that valuable information with you. Okay. Let's see. Stephen asks, what platforms do the signals work on? Very good question. Stephen, these add-ons work on MT4, NinjaTrader, TradeStation, and Metastock. So you can apply them. They also work on Thinkorswim, but there's a couple of things, minor alterations that have to be made. But if you are a Thinkorswim customer, don't worry, you will be able to access all of these add-ons and all the color bar changes as well as the arrows. Okay, so those are the 4 major platforms that you can apply these to: MT4, TradeStation, NinjaTrader, and Metastock, as well as Thinkorswim. But there are a few alterations you have to make through a few edits in the program, and our tech support can help you put that together. Okay. Monty says, thank you. You are more than welcome, Monty. I'm glad you enjoyed it. Let me see here, a few more questions. Tradim asks, if using candlesticks and it is a bearish bar, bears win, but PET D colors it green, how will you see the price action on the candle? Okay, it's a good question. A lot of people who just basically look for candlesticks or trade with candlesticks, have a hard time discerning how we're going to, see the colors when we apply the PET D. There's a specific way we tell you how to format your charts, okay? And this way you can see when a bar is up and when a bar is down, in other words, an up body or a down body, and you can also see when the colors are green or red. So it's not difficult at all. It's just difficult to explain right here because I don't have live charts. I just have a static presentation here, but it can be done. In fact, I trade with candlesticks and I use them on a daily basis, so there's no problem there at all. Okay. Thomas is asking, hi, Mr. Primo, when exactly will the course start? We're talking to start towards the end of March, so probably in the next 2 to 3 weeks. So it's going to be very short. In a very short time, we're going to be starting this. And remember, these are live classes, but we're going to be recording them. So let's say you can only make 1 or 2, but then you're busy the remainder of the course. You can study on the recorded material at your own leisure at whatever time you want of the recorded class we did for all the students. And then you can always contact me whenever you like. I answer emails and converse with students over the weekend, so this is no problem. So don't feel it has to be at a certain time. Once you become a member of the college, you're a member for life, and you can contact me whenever you like to answer any questions. So even though I would much rather you be live in the class with me so you can ask any questions over the internet, don't worry, we record everything as well. But it will start, the live classes will begin in the next 2 to 3 weeks. Okay, let's see here. Eric asks, how many times do you keep entering the same trend? Well, it depends if whatever strategy you have is generating signals. So we have seen trends go straight up for weeks, months, even years, depending on what time frame. As long as you keep getting signals generated, you can keep entering if you like. It all depends how you want to become a part of the process. We have some very long trends which some traders like to stay in just one trade and stay in as long as possible. We have other traders who like to get in and then get out, get back in and then get back out. There's no right or wrong way. It's just up to you. Remember, the only wrong way is to listen to what somebody tells you how to trade. That's the way 99.9% of all traders trade. They're taking their cue from someone or something else. We don't teach that at specialist trading, so I can't tell you how long, what's the longest time frame or how you should stay in a trend. It's up to you. It all depends on your style. Some traders like to be in and out quickly because they don't feel comfortable holding positions that long. Others feel more comfortable holding on as long as they can. So the only right answer is what makes you feel the most comfortable, okay? Randy asks, does the PET D work on lower time frames? Yes, it does. In fact, it works fantastic on lower time frames. I was looking at a intraday chart, a 500 tick chart of the E-mini using the PET D before we began today. And it gave a great short signal about an hour before we started. So, yeah, it works fantastically. Let's see here. So, yes, if you're asking if it works on short time frames, yes. And plus, not just the E-mini, it works on intraday time frames for stocks as well as the Forex markets. James, can you give a stop strategy now? Sorry, James, that's in the course. That would be comparable to someone going to a restaurant and saying, can you give me a free meal right now? It just, we gave you an appetizer here, but we just can't, it wouldn't be fair to the people who paid for that. It's just, but that's all within the course. And once again, if you've been trading for a while, let's say, according to your account size, you only want to risk $500 per trade. Well, then just place your stop where a $500 loss would be. Yeah, that's as simple as possible. So you can do that if you want. Let's say you want to make twice what you risk. Well, if you're risking $500, well, then exit where you would be making $1,000 or maybe $750 or $800. It's up to you. I'm just using round numbers, but that's not the complicated part of the strategy. The complicated part and the most valuable is what I gave away for free today. So that's really what you need to know, more than stop placement or exits. Let's see here. Let me go down. I believe I may have skipped some, and we don't have a lot more time. I see there are many more questions. Does this include the PET D trend trading? Yes, it does. It includes all the information included in the PET D course itself. So that's all. We're going to give you everything in the PET D. So, it's not just the PET D. You're also given an entire full week of where we tell you how to apply the PET D, how to work best with it, and how you can actually use it for entry trades as well. Yvonne says the Donchian channels do not work on Thinkorswim. We give you all other ways to alternate on how to use that as well, Yvonne. I know certain platforms don't use certain indicators that we apply, so don't worry. We share with you other ways in which you can apply that, okay? Rob asks, so the course addresses how to avoid whipsaws with this strategy. Well, Rob, one of the best things about this strategy is that it automatically avoids whipsaws. First of all, we have to be in some type of established trend, okay? So in order to do that, we have to be either above or below the 50-period moving average. Most whipsaws happen when you're oscillating either above or below that moving average. Go back and look at some of your trades. Most of the time, you're whipsawing above and below the 50-period moving average. So we have to be above that. And then we have to meet all the specific requirements for this strategy. If the requirements are not met, most likely because of a rangy market, well, we don't get a setup. So I'm not going to guarantee you that this keeps you out of whipsaw markets, but because of the way it's designed, oftentimes a strategy signal is not generated because we're in a whipsaw rangy market. Remember, we're following the trend with our techniques, and we need to have a trend in place in order to have a signal generated. So the strategy itself will oftentimes keep us out. But having said that, there's no 100% foolproof guarantee that any system, any strategy, any methodology will keep you out of rangy markets and whipsaw markets. That's just the price of doing business. But guess what? The PET D, the ATM, remember we showed you the ATM tool, the formula? Those things do a fantastic job of keeping you out. So those are the other tools as well that we share with you that comes in the college, okay? Let's see, I have time for just a few more questions here. Bill asks, are the classes daily or weekly? They're weekly, Bill. There's 6 classes altogether, and they're held on a weekly basis, okay? Eric is asking, how much does it cost? Well, remember, there's a discount. We had it on the page before, but I believe that the link is right there you see on your chat box just click on that link. The link will not have you purchase anything, so don't worry about that. It just will take you to the page showing you the discounts. But remember, we realize that some people may not be able to come up with a large sum, payment. We have for a limited time payment plan. So if you'd like to just put down a small deposit, you can be up and running in just a few days, and you can be in the college just by putting down a small deposit for a payment plan. Okay. Eric is asking, will the PET-D work with MetaTrader? Yes, it will. It works with MetaTrader as well. Let me see a few more questions here. Kim has asking, am I late to the party? Have you shown charts already? Yes, I have, Kim. I showed about 100 charts, but don't worry, you can request a link to this, and we'll share a lot more with you over that. One more question here. Grizia asks, why do you prefer the 50-period simple moving and not the 50-period exponential? This is a very common question I get. And remember, this is not a magical number, the 50-period simple moving average. What we're trying to instill in you is this concept that if price is below the 50, you should only be looking for sell setups. You should in no way consider buying anything if price is below the 50. Conversely, if price is above, you should never try to short anything. You should only be looking for buy setups. This is what's going to add to your consistency. And I can almost guarantee you that if you go back and look at your last 10, 20 trades, the reason why you had a number of losing trades possibly is because you were out of sync with this rule. Now, over time, we have seen that the 50 works well. The 50 exponential can work just as well, but it's really that concept we want you to understand, that the overall trend is where price is in relationship to that. Okay? So it doesn't really matter if it's exponential or simple. What really matters is where price is and what you are doing as a result of that. Most people fail in trading because they're inconsistent. And how do you become inconsistent? By buying below the 50-period moving average. And most people become inconsistent by selling above. Now remember, this is not 100% guaranteed. Every once in a while, you'll get a great short that's above the 50 and a great buy that's below the 50. But over time, we're trying to instill consistency in our traders. Remember, I shared with you what my mentors taught me. We want to become consistent. We're not looking for those home runs. We're not looking to sell at the very top and buy at the very bottom. We're looking to have 2 steps forward, 1 step back. That's what will sustain you so that you can be trading not just 10, 20 minutes, but 10, 20, 30 years. So if you apply this simple concept, which I shared with you today, you will, in my opinion, increase your chances for consistency tremendously. So go back and look at your last trade. See why you had some losers. You most likely were out of sync with that rule. Okay? Now, we're just about out of time here. Before we close, I just want to reiterate, this is a great, great package we have for this Forex College. And remember, even if you only slightly dabble in the Forex markets, all of these strategies, all the tools, the PET-D, the ATM, all of my 38 years of experience can transfer over into any market. So you don't have to be a full seasoned Forex trader to join the college and trade with us. You can be trading stocks as well as the E-mini futures as well. These strategies transfer over very well. The focus mainly will be on the Forex, but you can apply them over onto other markets. Once you learn how to trade them, it doesn't matter what market or what direction. So, in closing, if you're interested, go to Pro Trader Strategies. That's their email address right there, trading@protraderstrategies.com, or you can call them directly at area code 310-598-6677. You can speak to a trading consultant, and they can set you up right away with a payment plan so that you can, be up and running with a relatively small deposit. You don't have to come up with the full payment plan. Now, to learn more about the Forex College and the payment plans, use the link you see there in the chat box, or call, once again, the number provided in front of you. That's where you get all the information. You can be up and running very shortly. And remember, the course and the college starts in just a couple of weeks. So if you want to be in those live classes, you have to sign up and take advantage of this deep discount as well as the payment plans, because we're not going to offer these forever. So if you're really interested, here's how you sign up. In closing, I want to thank you so much for taking time out of your Thursday today, your Thursday morning, missing some trades possibly, but go apply what I share with you. Paper trade first. Don't just simply jump in because your eyes are going to light up when you start to see a lot of these setups. but paper trade it for a while so that you understand the process. You'll see how consistent these techniques are, and then hopefully you'll decide to sign up and become a student of mine at Specialist Trading. Thank you so much for attending. I look forward to all of you joining the Forex College with me and becoming members of mine, and I look forward to seeing you next time. Bye-bye.